Hey guys, it is Sunday, Jan 5th, and Bitcoin's at 98,500. And this episode is going to be a special episode on the history of money, part one. There's going to be, I think, probably 4 parts to it, but it's going to be interesting. I had a little bit of reservation about this, but I'm not going to be able to cram the entire history of money in any kind of meaningful way, and nor, as Tom Young said, should I try to recreate something that's beyond my scope. But I want to tell you how I'm looking at this from a Bitcoiner's perspective. How does a Bitcoiner look at the history of money and banking, and really starting in the Medicis and kind of working our way up through the American Revolution and the 19th century. And this episode is going to stop kind of at the end where Cornelius Vanderbilt dies. So that's today. There's a lot on the plate. I made a presentation about it. I'm curious what your thoughts are. This is a very first attempt at it. It's imperfect, but I think you'll find it interesting. As usual, in order to further my media empire, I would like you to go to YouTube, hit the subscribe button, and go to Twitter, and also if you want, subscribe to my Twitter account for $1 a month. Anyways, that's it. Now let's get into the presentations. I've been really reading an enormous amount on the history of money over the last three to 4 months, and I've prepared somewhat of a history here, and it's really going to be the history part one. So let's give this thing a shot, and we'll see how we do. All right. So before I get in, I'm going to talk. This is what I'm going to cover in this specific episode. I'm going to talk about the Medici banking dynasty. I'm going to talk about the rise and the rise of the Medicis, the fall of the Medicis, the rise of Spain, the discovery of gold and silver in the Americas, and the fall of Spain, the invention of paper money, which happened in Massachusetts, believe it or not. You could argue it was done earlier and completely separately in China, but that did not carry over here. From the European and New World perspective, it was done in Massachusetts. The start of the Bank of England, a printing of Continentals to finance the American Revolution, the printing of Assignats to finance the French Revolution, Wildcat Banking in the U.S., the printing of Greenbacks during the Civil War, and then really I want to start covering the first growth industry, which is railroads, and how Cornelius Vanderbilt basically invented kind of the modern stock financing schemes and became the richest person in America. All right, so I really want you to get 4 things out of this talk. The first thing is that paper money, as Voltaire said, always goes back to its intrinsic value, which is 0. Paper money always fails. That's the first thing. The second thing is paper money backed by gold or by real estate always fails too. So it doesn't matter whether you say you're backing it by something, it doesn't matter. It always fails. The third thing is that banks always fail. The idea that you can just deposit money and lend it out with fractional reserve, that ultimately does not work. And the last thing is that money never really lasts more than 6 generations. I would even say 3 generations is usually kind of the max. With that in mind, let's dive in. And I'm going to pick, we could go all the way back to the, Romans or even before that, but I'm going to really pick the Medicis as the start. Now, in 1220, in Florence, Italy, there was a separate republic. There was this creation of the gold florin, which was 3.5 grams of gold. And this was kept completely pure for 300 years. It was not watered down. It was a pure piece of gold. And it became absolutely the gold standard, so to speak, of money in the medieval ages. And the Medici family started accumulating these coins. And, you know, one of the major Medicis, which was Cosimo de' Medici, during his life, he was estimated to have had 200,000 of these florins, and that's equivalent to 700 kilogram bars. Now, he was the richest person probably in the world at his death, and he had a lot of art. He left, amazing Renaissance art and real estate, but he had about 200,000 of these florins, and 700 kilograms today would be $64 million. But it's not quite equivalent because, gold, the gold supply tends to, at that point, it wasn't growing that much, but even today, it's doubling every 60 or so years. So, if you look back in 1220, you're getting an enormous amount more supply than there was in 1220. So 700 kilograms today is not the same thing as 700 kilograms back, 800 years ago. So we have these Medicis, that we have this hard money, gold, and we have this banking system. How does that banking system work? Well, these guys create this whole system of almost merchant banking, where they're taking their stash of gold and they're lending it out. So you could, if you were a merchant, you could certainly use the Medici as your bank account, right? So you could deposit money there that did not earn you any interest. Okay, it was just a safekeeping role. And meanwhile, they managed to lend out the money anywhere from 8% to 20% to various counterparties. And those counterparties could be businesses, they could be very rich individuals, they could be monarchs, and they financed wars. So, if country A was trying to go to war with country B, Medici's would sort of pick the winner, and they would say, listen, we'll help you win the war, and here's some money to win the war. These are high rate interests, but they did it. They also created these bills of exchange, which was sort of like the very early version of a check. And basically it said, if you wanted to pay somebody in 2 months, you could say, I will pay you 100 florins or 1,000 florins in 2 months. Now, the person who got that in 2 months could go cash that check in for 1,000 florins. Meanwhile, the person writing the check would still have enough time to make sure they had the 1,000 florins. So this kind of check writing based on hard money, which I think very interesting, because this may be where we're headed with Bitcoin. So I really think this model of the Medicis is worth really studying. So in any case, this model was ultimately copied by the British, by the French, and elsewhere in Europe. So after the florin was created in the 13th century, in the 14th century, the British copied it and they created the noble, and the French created the écu, and the Spanish created something very similar called the escudo. So we have these sort of very gold standard coins that were circulating now all through Europe. Now, the Medici Bank died in the 15th century, okay? Why did it die? Well, it died because it made bad loans, and it made bad loans to monarchs in particular. Edward VII was one who borrowed a ton of money and didn't pay it back. And finally, in 1494, these Medicis were actually forced out of Florence by Charles VIII. So, and that was pretty much the end of the Medicis. They tried a few times to come back, but didn't really work. But it's an interesting model. It's one of the first real modern banking models. They didn't invent banking, but they certainly they perfected it, if you will. But what's the motto in this? Well, the motto is banks always fail. It doesn't matter. Even the best, even the Medicis, they fail. Okay. Now, going on our timeline, we get to 1521, and all of a sudden the Spanish managed to conquer the Aztec Empire. About 10 years after they conquered the Aztec Empire, they conquer the Inca Empire. They're basically just invading one South American country after the other and just taking all the gold. Now, before the invasion, all of Europe likely had about 100 tons of gold and a couple thousand tons of silver. But by 1599, once Spain had just basically mined the hell out of South America, Spain alone has something like 3,000 to 5,000 tons of gold and 60,000 to 70,000 tons of silver. Now, while they were getting it, they were spending it, right? So, this is also interesting to note because people are like, well, what happens if BlackRock or Michael Saylor gets all the Bitcoin? Well, you get the Bitcoin, you spend the Bitcoin. You get the gold, you spend the gold. And in the case of Spain, they basically funded religious wars, the Inquisition, and very expensive tastes by their monarchy. But they basically did not build out any productive capacity. They just wasted their money. And so the learning from this is that money really lasts more than 3 generations. It's, unless you really plan for it, your money will go. The Spanish version of a Lambo is probably a Dutch tapestry. The Dutch sold the Spanish the Lambos, but they were very, very frugal. They reinvested all of it into sailboats and trade routes to Indonesia, and they created the East India Company, which is the world's first corporation. Okay, and this led to the golden age of Holland for the 1600s, in which they became unquestionably the leading economic power of the day. And they used the gold ducats from Venice and the silver guilder, which they kind of minted themselves as their currency. And, the guilder lasted right all the way up till the euro in the 90s. Okay. Lesson, again, money rarely lasts more than 3 generations. The golden age was 100 years. In the 1700s, Dutch didn't do so great. Okay, now we get all the way up to the colonies. Now, in 1690, the state of Massachusetts was in a predicament. The coffers were empty, and the British had really tried to make sure there was very little gold or silver that was in America. And this was sort of their philosophy of mercantilism. They were prohibited from minting their own gold or silver coins, and basically, they just basically had no currency. So the state of Massachusetts decided, hey, we're just going to print our own paper money. So they printed some shilling-denominated money because that's what they used in England, and it completely failed. And the British ultimately banned it. There was a sort of version right after the first version where they backed it by land, supposedly, and that didn't work either. So paper money backed by land did not work, and the lesson is paper money always fails. All right, next. Britain said, well, that's a good idea. We like your innovation. We'll do it for ourselves. And in 1694, they started issuing pound notes. And in the 1700s, a note would look somewhat like this. Now, the patriots of America said this was a great idea. We're going to use this to finance the war. And they issued these continental currencies to fund the revolution. So they issued $2 million worth of this paper back in 1775. The paper did not perform well. It went down like this. So they said, it's worth it. Continental was like, it's worthless. That was the saying of the day. And again, the lesson here is that paper money always fails. All right, well, French Revolution was right after the American Revolution, and they said, let's do the exact same thing. We'll issue these assignats. And interesting little fact, they kept the king alive for 10 years after the French Revolution. They didn't chop off his head immediately. And they put his logo on because they thought it would sell these assignats. It didn't. Basically, these things went straight down to zero in a matter of 7 years. So it didn't matter. They kept on trying different schemes, different backing. They said, we've got this church-backed land that we're going to use to back it. And the result is, the lesson is that paper money always fails. Now, colonies start getting going, and now in between 1837 and 1862, we get this flurry of these state banks. And bank charters were pretty easy to get. Anybody could become a bank and start issuing paper. This is an example of some of the paper. The Coinage Act said what the paper was supposed to represent. It was supposed to be redeemable in either gold or silver, but it wasn't. And the bank's paper started selling at discounts. And you had to buy these things called bank reporters just to check on the value of your bank paper, because it frequently was trading at 20 cents on the dollar. Okay. Anyways, let me...
Hello?
Yeah, hold on a second. All right, guys. So at this point, most banks were inherently unstable. Now, these banks were not intended to give money interest on depositors. They basically had one function, which was to provide depositors a safe place to park their cash and to do business. Most of the people who were clients of these banks were not even individuals, they were businesses. Only about 20% of Americans had banking accounts. So very similar to kind of where El Salvador is today. It was really a cash economy for the most part. People didn't have bank accounts. Businesses needed bank accounts, and they didn't expect to get any interest on their money at all. Now the banks, on the other hand, needed to have a business model. So when they took in the money, they did lend it out, and they mainly used sort of personal relationships and reputation as the basis for this lending. Sometimes they used real estate as collateral or other things as collateral, but it was really mainly just personal relationships. And because the money was lent out, for longer periods of time, and people could do a bank run, we had these very, very clear panics. And we're going to end this particular episode a little earlier, but there was a panic in 1819, a panic in 1837, another one in 1857, a really big one in 1873. and another one in 1893. So, we have, one panic every 20 years that just kind of wiped out half the banks. So the motto of this is that, of course, banks always fail, right? That's what they do. Now, in 1865, we had the Civil War, and the Union started issuing money that they declared was not legal, that was legal tender, but not backed by gold. They just said, we're going to issue these dollars. You're going to have to treat them as dollars. They're legal tender for any kind of purchase within the Union. And they called them greenbacks, okay? Now, because the Union won the war, they didn't go to zero. In fact, they became kind of the money that we have now. And they were eventually turned back into convertible money. So this is the exception that proves the rule. So, you want to put, they did go to zero. No, these ones didn't go to zero. But, however, they came at a cost. And the cost was that the U.S. government just ballooned at this point. So before the war, the federal budget was about $63 million. After the war, it reached $1.3 billion. Before the war, the national debt was $65 million. After the war, it had reached $2.7 billion. So, we had this, 20x increase in the size of the federal government before and after the war. So that was the price we paid for these greenbacks. Now, at that point, up until this point, we were really in an agrarian economy. It was just a bunch of farmers. But we had the first growth industry, the first real serious need for capital in the U.S. had emerged, and that was railroads. These started in the 20s and really kind of picked up after the Civil War. But $10 billion was invested in railroads, in those dollars. Railroad stocks became by far the main investment vehicle. So there were stocks almost meant railroad stocks. And Cornelius Vanderbilt had transitioned from steamships. The steamship was invented in 1807. And Cornelius Vanderbilt built a fortune in steamships. He pivoted into railroads, and he became the richest man in the country. However, 3 generations later, or if you look at it now, 6 generations later, the wealth is entirely gone. There actually are no Vanderbilt millionaires, even in 1970. There's almost no. So it's amazing that you went from one of the biggest fortunes in the world to nothing over time. And that, again, proves that money rarely lasts more than 3 generations. Okay. Well, that's a long one. It's going to be longer. I got to go over, I want to go over Rockefeller, Mellon. I want to go over the creation of the Fed. I want to go over the creation of the Executive Order 6102, the end of the gold standard under Roosevelt. I want to talk about the financing of the war and how we eventually paid our way out of it. I want to bring up Nixon and 1971. The WTF happened in 1971, and then we're going to bring it all the way up to the Bitcoin world, where I see the world going. So I hope you've enjoyed the presentation. There will be more, and again, this is very rough. This is just a Bitcoiner's view and a sort of synthesis of kind of everything that's been going on over the last 200 years that's kind of led us to this mess that we're in right now, and that hopefully Bitcoin will solve for us. So Hope you enjoyed it. And again, hit subscribe. Really appreciate it. And we'll talk to you later. Bye.